What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at the ever so popular S&P 500 ETF SPY, ticker symbol SPY, on a variety of time frames in anticipation of the next trading day, Thursday, May 23rd. All right, you guys, so SPY here today down $1.53. That's minus 0.29% in regular trading hours. It is up here just under a point. After hours, of course, we have NVIDIA's pretty great earnings and some news about a 10-for-1 stock split. Big jump in sales as well, so that's signaling continuing artificial intelligence related booming going on across the industry, at least. So the SPY's up about $1 or so, a little less after hours. Either way, volume's a little bit low, so take that with a bit of a grain of salt. But let's take a look at SPY and get the best feel we possibly can for this name heading into tomorrow. We'll look at, of course, the volume profile, the psychological levels, implied volatility. We'll look at the expected move and the directional bias for tomorrow coming out of the chain. So let's get started here on the 5-minute chart with a volume profile analysis. Listen, guys, by the way, if you are new here, SPY's a daily upload. I cover this ETF every single day after the market closes. So, if you get value out of these, I appreciate you subscribing to the channel. I hope you do so. Helps out tremendously, and I will keep the videos coming. So, let's take a look under the hood here and see if we can pull out any directional bullish or bearish bias from underneath the waves inside of the volume profile. So, we had a very contextual open. Throughout the morning, honestly, not a lot. We get a big pop on the red bar here. To be fair, that's a wiki candle, and it's just a single outlier. Too much of a risk to assign any bias there. I'm not going to do so. As we move through to the afternoon, of course, we had minutes today, the FOMC minutes. And with the minutes, guys, understand that all they are is basically a deeper look into the behind the scenes of the previous FOMC meeting. It's usually not a lot of new information, but what it does is drive a lot of headlines. And what today's FOMC minutes did was trigger a lot of headlines about the Fed being uncertain about the path forward in terms of rate cuts, and some worries, highlighting some worries about the Fed being, I'll use the word insecure, about the current state of policy and how that's making progress or lack thereof on inflation, at least as quick as they'd like it to. So that caused a bit of a sell-off here in the afternoon. As far as volume profile goes, you look at this here, honestly, a bit of a mixed bag. If I were going to assign anything, I'd probably assign maybe 5% bearish bias, which is very light, extremely light. Any less, and I wouldn't be able to assign any at all. But honestly, what's interesting about that is if you look at the movement, it was a pretty aggressive downside move. A 5% bearish bias on that move is almost nothing. Okay, which I think is kind of interesting in and of itself. Now, heading into the close here, you see volume start to pick up. Arguably, this green bar here is more of a battle bar because you see that wick, a lot of buying and selling happening at the same time. And then you get the rebalancing occurring just before the closing bell and immediately after the closing bell. So really, that's kind of it here in the volume profile today. Let's move on to a very important, effective, and arguably much more simple way of looking at things, the psychological and self-fulfilling prophecy mentality levels. Okay, we'll start here on the 30-minute chart. Of course, the white line is the 50 period. The gray line is the 200 period. Here's what we're looking at heading into tomorrow. You guys remember yesterday, right? We had kind of put some distance in between the ETF and those two levels. Things were starting to look all right. Well, this morning we faded through in pre-market, very low volume. Okay, I like to see confirmation with higher volume, so I waited till the open. And once the open hit, we got one more attempt at retaking that 50 period. We eventually faded down and then rejected hard through the 200 period. That, of course, was likely a result, at least mostly, of the minutes here. Once that smoke had kind of cleared, we tried to make a recovery, unable to reclaim the 200 period late in the day. So what we're looking at here now, guys, at least as of the close, is or SPY, I suppose, I was going to say the S&P, SPY, sitting beneath both the 200 period and the 50 period. However, after hours, we've now reclaimed both. For me, I like to watch the intraday session that has the highest volume. So for me, I'm kind of thinking of this still as not reclaiming either one, because I like to go off of the close when the real volume kind of dries up. So here's what I'm looking at tomorrow, bulls. If we could reclaim both the 200 period and the 50 period, and then during the intraday session, just at some point, whether we reclaim it in the intraday or we open high or whatever, we can get a retest of the 50 period and then a bounce on high volume, a high volume bounce. That's great confirmation, okay, of reclaiming both of those levels. And what that does is it puts you above both psychological levels on this chart in particular, which is a good situation to be in, at least on the 30-minute chart if you're a bull. Now, bears, similar deal, but honestly, if you guys could kind of fade this after hours movement and hold off that 200 period as a resistance level, ideally with an intraday test and hard rejection, that's great for you guys as bears. Now, the 4-hour chart, let's take a look. You can see here, if we go off the closing price, we're about minus 0.46% away from that 50 period as of right now. If you go off the current price in the after hours, we're about minus 0.63%. So well within a single day's potential for SPY. Okay, so bulls, any downside test of that ascending, which is good, by the way. It's good to see that that 50 period is ascending, keeping up mostly with the ETF as it moves higher. That's great. But it's only great if you can maintain that as support. Okay, so if we test the 50 period, we're already above it. Don't care what volume we test as long as we get a high volume bounce. Again, confirming that as support. Bears, the ultimate goal here on the 4-hour, high volume break downside through the 50, low volume retest, high volume rejection. And as we move on to the most important chart of all, which is the daily, okay, you can see here, guys, that we are still struggling with that 530 region. We've been talking about this a lot, that this all-time high area, slash 530 region has been a struggle now for the last 6 trading days. Okay, bears, if you could really reject hard off 530, you haven't really been able to do so yet in the last 6 trading days, at least sustaining that into the close. That's the goal. Reject as hard as possible off 530 and get as low as you can. Ideally, we're talking, if we look here, off 530, below 525, that would be a full percent move, which is not, that's a rather volatile day for SPY, but it's possible. Okay, that would be great, but just finally rejecting and putting some distance between 530 and the price of the ETF is what you bears, I think, kind of need, at least in the very short term. Bulls, same deal, except breaking this area we've been struggling with to the upside. Okay, 530, arguably up to 532-ish, 531.50, 532. It's a problem. It's been a problem on 4 days in particular. For the last 6 days, we've been struggling with 530. That's the real story on the daily right now. Okay, is making a definitive decision around 530. Okay, between the bulls and the bears. Now, implied volatility. Let's look at this. Up a little bit today. Now, compared to the last week or so, I would say it's about flat. Okay, compared to the last month, it's low. And compared to the last 3 months, it is also low. Okay, what's relevant to you is whatever is closest, or for you, you can take a look and get a little more nuance than that. You want to be comparing IV to your intended trade time frame. How long do you expect to be in the particular trade that you're worried about? All right, then compare IV to where it stands compared to that time frame. When it's lower, Vega value is low. If it pumps and it's really high, comparatively speaking, there's potentially a higher risk of IV crush if you're buying contracts. And kind of the same breath, low IV, if you think about that, tends to signal more comfort in the current price. Why? Because the option traders are fundamentally pricing in less volatility. And since volatility tends to be more aggressive to the downside, you can also see IV rise if a stock or ETF rises, okay? But it tends to jump when you see downside moves. When you see IV really, really low, the options traders are literally pricing in less expected volatility, which shows a higher level of comfort. When IV starts to really spike, comparatively speaking, to the time frame, it's showing that traders are kind of, in a way, like insecure about the current pricing, because they're pricing at a lot of volatility. They're expecting a lot of change. All right, so I like to think about it that way. Now, expected move here heading into tomorrow. We have daily expiration, so the expected move by tomorrow's close compared to today's close is plus or minus $4.36 a share. That's the one standard deviation expected volatility being priced in by the market. Obviously, very important to understand if you're trading options. That's the market's baseline expectation and how those contracts are going to be priced in terms of volatility expectation. So understanding that and having a bias can help you better position yourself using options. Now, directional bias. All right, let's take a look. About 4.7 million contracts traded today. 2.01 million were calls and 2.67 million were puts. So we're seeing a bearish bias here out of the traders today. And if you break that down by short-term speculators, the 0 to 20 delta range, we have 603,000 calls and 1.2 million puts. It's a relatively heavy bearish bias out of the short-term speculators here on SPY today. Now, as far as macro events tomorrow, guys, 8:30 a.m., we have U.S. initial jobless claims data hitting. The forecast for that is 220K. At 9:45 a.m., we have the U.S. S&P Services PMI flash. At the same time, 9:45 a.m. Eastern, we have the U.S. S&P Manufacturing PMI flash. And at 10 a.m. Eastern, we have the U.S. new home sales units data. And then 3 p.m. Eastern time, the Fed's Bostic is expected to speak. So there's the macro schedule for tomorrow.